Hey guys, all content discussed is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. Over the past couple of months, a growing number of YouTubers and would-be influencers are suddenly giving up or saying irrational things in regards to investments made in AMC and GameStop, and this causing many people to question not only the validity of a squeeze of meme stocks, but YouTubers' integrity as a whole, which sadly enough also means me. Because of this loss of integrity, I find it suiting to make this short vid explaining everything. This video will have 3 main segments. We are going to talk about the latest claims regarding MOIS and some controversial points being said. The second portion will be regarding the squeeze itself, with hopes of providing a good overview of the current situation as it stands at the moment, and then lastly, of hopefully conveying to you guys where I stand in all of this, why I hold the opinions I have and where I see things going. You guys are owed a bit of transparency from me, and I think there is no better time than this, so let's get started. Today, a very popular YouTuber within the AMC meme investor group made a video in which, through his own technical analysis, asserts that MOIS is just not on the cards anymore. The reasoning behind this surprising flip of opinion is that, and I quote, "There is already enough systemic risk all over the place, and that having meme stocks pop thousands of % is no longer tangible at the current moment." He cites that after inflation is no longer an issue with institutions going risk-off, we will apparently have more opportunity for squeezes. He articulates that the situation is grim because institutions carry no risk on any trade. If they are caught on the wrong side of a trade and get margin called, they are immediately saved by another institution willing to supply them with the needed liquidity to pay off said margin call. He goes on to touch on inflation, pretty much some of the basic points we ourselves have already obsessed over the past year. And lastly, he said it would be impossible, in a practical sense, for AMC to reach $100,000 per share since it would equate to about $50 trillion in market cap valuation. Now, a lot of what has been said is true. It's hard to imagine AMC running to 6 figures, and we know institutions all help each other out when caught on the bad side of a trade. The issue I have is the mere conclusion that was arrived at, because all of this information was previously known in the beginning of the investment in meme stocks. Nothing that was said is new relevant information that changes the foundation of a squeeze. This information was actually what was produced as a way to understand the dynamics by which the squeeze even became a thing in the first place. The essence of investing in meme stocks lies on the accepted understanding that institutions have little to no risk in the game because they can short companies through joint efforts and run risk-free schemes to force corporations into bankruptcy. The systemic risks that were mentioned are nothing new, we have known about them since day one. So to use these excuses to call the squeeze off the cards makes no sense. The truth is, the moment retail investors decided to buy and hold, shorters' fate were sealed, because unless retail sells off, they cannot cover back their short positions. Sure, they can continually print naked shares and route purchases into dark pools, but that is not covering. GameStop and AMC communities routinely buy shares, meaning they are the ones on the hook. And this is where I want to talk about GameStop and directly registering shares, because it's now the most crucial and important part in proving naked shorts. With a large community directly registering shares, consistently moving shares out of the market, brokers will have a harder time allocating shares to fulfill orders. As we continue to lock the float, price volatility for GameStop should in theory begin to rise dramatically, paving way for huge price runs in the future. But this doesn't even come close to the real change that directly registering shares will bring. Though we can only speculate as to what will happen, since this is all new to us, there are some leading sound theories. First off, let me say that I don't think institutions would want to risk having the entire float of GameStop be directly registered shares, because it would 100% prove without a doubt that meme investors are right and call into question the statements made by every hedge funds, by SEC officials and by the DTCC itself and the practices they have been using, which could open the door to legal litigation for everyone involved in shorting this, from brokers and hedge funds down right to the DTCC. This would easily raise question among other investors as to the real authenticity of their investments in our markets, and it would not be in the best interest for the United States to have its credibility further tarnished by some gambling hedge funds that caught a bad trade and decided not to pay. I think before the entire float is directly registered shares, GameStop would ideally be allowed to squeeze. I think this is something the government and financial institutions would be willing to sacrifice in order to preserve the status quo. But assuming they allow us to directly register the entire float of GameStop, I think the company would have to issue an order telling ComputerShare to stop registering shares, At which point they will then be forced by investors, who at this point without a doubt will own 100% of the company, to make a case with the DTCC or even seek legal course in order to investigate why it is they own the entire float yet the price is still low and people are still buying shares through brokers. This is not even accounting for the tons of financial firms who are holding and buying GameStop shares as well and hold them outside of ComputerShare. I have no doubt investors are going to be demanding answers from the GameStop board and that the board is going to be forced into action immediately. At that point it's hard to predict what would happen, but our job as retail investors would essentially be done. We would have proven we own the float, and through this type of investigation, I really don't think institutions would be able to hide anything anymore. Frankly speaking, I think everyone with deep ties in the DTCC, in hedge funds and SEC already knows this will happen. They are just all waiting to be forced into action. This would be the end of it all, the place where there is no turning back. We prove that the financial system is corrupt and through legal course we force them into playing fair, in which we have all the chips on our favor, or they simply let us squeeze in order to preserve the false pretense that the stock market is fair so that they can continue operating this way down the future. Preserving the status quo is way more important than many people think. This brings me to my last point, which is where do I stand in all of this? I stand firmly in my belief of a squeeze. I know it's real because of the hundreds of compiled evidences demonstrating price manipulation in every possible way. The people claiming this play to be over have no brought any new evidence suggesting shorts covered. Ironically, these same people were once the ones pumping AMC and GameStop to the moon, often lying to their audience about dates as a means to create urgency. They made tons of money milking people's hopes for a quick squeeze when in reality this is a long-time play with inherent risk and an unconventional end. Anxiety rules the hearts and minds of the weakest investors and they are running around freaking out, making assessments without provided context and paper handing. But me, I stand in the same position I did when I began this YouTube channel. I believe in the squeeze, not out of hope, but out of unconditional certainty and firm belief in what I see every single day. I do hold some unpopular opinions that make me an unreliable source of information for a majority of shareholders. For example, I hold both GameStop and AMC, but I am more attached to GameStop because I find its squeeze potential to be ultimately higher than any other meme stock, but that does not take away anything from AMC. AMC is also primed for a huge run. By the same token, I think the social approach by GameStop investors is often wrong. The community can oftentimes be incredibly toxic and they routinely demonstrate to have this misguided sense of superiority, which makes them think they are in any position to bully and harass others for the investment choices they make. I think GameStop and AMC are both shorted to the end of the world multiple times, and I think they will both squeeze, believing GameStop is going to be the real home runner, but that doesn't make AMC a bad investment either. In the end, we don't even have the real figures to objectively compare each other, so any statement made to bully one or the other falls into nothing but harbored sense of entitlement, a lack of self-awareness and a profound level of stupidity. Buy what you like best. I make content covering both GME and AMC, but most of what I talk about are market conditions, and that is what I will continue to do because I believe market conditions to be serious indicators on future price action of GameStop and AMC. The way I see things into the future, with GameStop, the lower we go, the faster we will directly register shares and get them out of the market, so it honestly plays to our advantage. The fact it holding better than SPY and other benchmarks and popular blue chip stocks signify to me that shorters know of risks and have figured out a way to more or less keep the price balanced to their current needs so that it's not high enough where it can get too risky and volatile or too low where directly registering shares becomes too big of a problem too quick. They are playing the long game in hopes of getting people to sell off, which was always going to happen and it's working just as expected, but that doesn't change anything, because the people holding it forever with no intent on ever selling will not go away. They are growing and they are continuing to collect shares routinely. And that's sort of how I stand on things. Don't ever let any influencer dictate to you what will happen or can't happen. We don't know where AMC or GME can run to, we are all in the dark just like you. Keep in mind too, these same people who once pretended to know when MOAS would happen are now also capping it to be around 3 figures at best. Funny, because two stocks recently ran thousands of % with no news whatsoever, but GameStop and AMC, the biggest and most popular tickers in the entire world by a long margin, are somehow unable to replicate the same runs? The lack of common sense being displayed by others here is appalling and shows that they are here to simply get clicks from you. I cannot tell you how high we can go because we don't even know how many shares there are. What I can tell you is that AMC and GameStop can and will easily run over $1,000 with no problem. This is a lengthy process that will not be quick, can take years to manifest, and the battle might even spill over to the courts. Nothing like this has ever happened, so stay strong and don't get manipulated into selling by some goofy YouTubers. I freaking love you all to death. Join the Discord if you like to actively day trade and make money into the moon.